Hello there, welcome to another video. I'm at home today, sitting in my living room. I trade from home, so I'm at home most days. I built this bookcase all by myself. I'm extremely proud. So designed it, ordered the wood, built the bookcase myself. I'm really happy. Okay, in the previous video, I shared with you a number of things that I have learnt over the last 15 years of trading. And one of the things in particular, lots of people commented on, and that was my recommendation that you do not trade smaller time frames. I received comments like, is it impossible to trade smaller time frames, or so and so trades 5-minute charts and does incredibly well. So I wanted to address that in this video, answer those comments, those questions that I got, but there was obviously enough interest in smaller time frames that I felt it was appropriate to make my next video about trading smaller time frames. Now there's so many reasons why I don't trade smaller time frames. The lowest time frame I will trade is the 1 hour, but most of the time it's the 4 hour time frame. That's as low as I'll go most of the time. Sometimes the 1 hour though. Okay, why do I trade that way? Why do I recommend you don't trade 5-minute charts or 1-minute charts, 15-minute charts? There's so many reasons, many of them, but let me give you 4 of the main reasons why you shouldn't trade smaller time frames. But first of all, I'm not suggesting it's impossible. If you really want to become some sort of great day trader, that is your goal, that's your purpose in life, then go for it. I wish you all the best. But from my experience of being a trader for 15 years and starting off by trading smaller time frames, many of the 5-minute and 15-minute time frames, my recommendation is that you stay away. Now, what are the reasons why I recommend that? Reason number 1, trading is emotional. There are negative emotions when you trade, and those emotions significantly increase when you trade smaller time frames. Sitting there watching the candles open and close and go up and down, and your P&L changing constantly, adds to negative trading emotions. Why make trading more emotional than it needs to be? Obviously, the more negative emotions you have, the harder trading is going to be, and the worse your performance could be. Trading smaller time frames will increase trading emotion. That's point 1. What's the second reason why I suggest you stay away from smaller time frames? Slippage. Okay, what is slippage? Slippage is when you have your stop loss at a certain price, but you actually stopped out at a worse price. The broker does not close the trade at your desired price. That is much more likely to happen trading smaller time frames than higher time frames. If you're trading smaller time frames, you're going to have a tighter stop loss. When trading higher time frames, you'll have a wider stop loss. That doesn't mean it's going to be less profitable. It doesn't mean that risk to reward ratios are not going to be as healthy. If you have a wider stop loss, you're going to have a wider take profit. What will happen though is you will feel the impact of slippage, and you will witness slippage so much more, significantly more, on lower time frames. Scheduled news events, overnight moves in the market, unscheduled news events you cannot really anticipate, prepare for, these things will give slippage. They will result in slippage on your trading accounts. Trading the 4-hour time frame plus, I never experience slippage. I just don't. And even if I did, it would not be this huge blow to my account. Trading smaller time frames, though, is a different story. Now, my phone keeps wobbling around. Even though my phone's light, it's quite hard to keep something still, so I do apologize if it's moving around. So, increased emotions, increased slippage. That's 2 reasons. What's the third reason why I suggest you don't trade smaller time frames? From my experience as a trader, training traders for the last decade, from my experience as trading myself, people I talk to online, etc., etc., most people that try and day trade, most people that trade these small time frames blow their trading accounts. There's a much higher risk of blowing your account and a much higher chance of failing as a trader the smaller the time frame you're trying to trade. And it might be hard for you to accept that, but that's the truth. Trading is hard enough as it is already. It's really difficult to become successful in trading, especially Forex trading. Why make it harder on yourself by trying to trade a 5-minute chart? Like, why do that? Our goal is to make money. It's to be successful. It makes no difference to me if I have to do that on a daily chart or a 4-hour chart or a weekly chart, whatever. I'm here to make money. So why make it harder for yourself by trying to trade a smaller time frame, unless you're trying to feed an ego, and that's not the point of trading. I am getting a bit distracted. So it's hard enough to do, but that's not really the third reason. The third reason is you're more likely to blow your trading account. You're more likely to fail trading smaller time frames. Perhaps you disagree, and you're entitled to disagree, but I think those first 3 reasons are genuine reasons from my 15 years of trading. They're reason enough to stay away from lower time frames. Now, the 4th reason I'll give for staying away from smaller time frames, and that is most people's schedules, most people's lives do not allow for smaller time frame trading. I do not want to sit at my desk for hours on end every day because I don't want to miss a certain candle or pattern on a 5-minute chart. I want to have a life. I want to have a good lifestyle. Most people are studying, they're working, they have other commitments, they're trying to run a business, they have a school run to do twice a day, they have to cook for their family, whatever it is. They don't have a life that allows them to trade these smaller time frames. So these higher time frames generally fit better with the lifestyle that someone has or wants to achieve. I have no desire to sit at my desk more than I need to. I have no desire to increase my negative trading emotions, to feel the impact of slippage, and to have a greater chance of failure. Hence why I don't trade smaller time frames. Leave your comments below. I'll speak to you in another video.